Good morning. Welcome to Market Day Report. I'm Tony St. James. Well, fourth trading day of the week, but the weekend is almost here thanks to that Labor Day holiday on Monday. It's a shortened week, which also means today we get out weekly export sales numbers from USDA. What makes this an interesting report is it's the end of the marketing year for corn and soybeans. So the numbers we get are technically in the rearview mirror, but now that means from this point forward, we focus on the new crop. Well, speaking of focusing, how about we focus on how corn moved in overnight trade. Quarter-cent higher on the September, $3.90 and a quarter on the old crop. December up 2 pennies at $4.12 3/4. Look at that July contract, inching towards $4.50, settling $4.47 and a half, up 1 1/4. What about soybeans? Higher across the board. September up 2 1/4. November up 2 1/4, 10.25 3/4. And the wheat market has been under a bit of pressure here this week. September Chicago lower. December down 1/4 cent, 5.74 and a half. But July penny higher, 6.13 1/4. We'll hit 2 contracts for hard red. September down 4 1/4, 5.81. New crop July, 6.12, half penny lower. And spring wheat Minneapolis, as it settles in the overnight session, lower on December, down 2 3/4, 6.23. Cotton market has been struggling to move back up above 70 and couldn't do it in overnight trade. 68.93, down 51. Let's talk export sales. Brian Hoops, President, Midwest Market Solutions. Welcome to a Friday, and will we be trading some of these numbers?
Well, most likely we've traded them already, Tony, because they came out at 7:30, and we did see a little bit of a bounce in corn and soybeans after these numbers were released. So this is the end of the marketing year for the old crop category, the 23 crop. So we saw net cancellations for both corn and soybeans. That's not uncommon, as it's marketing year low for corn and soybean sales. But because we're rolling from those previous purchases into the new crop category, so it makes it a little bit skewed. New crop sales were very strong for corn, 71.8 million bushels. We had net reductions of 6.8. New crop soybeans, 61, net reductions of 8.4. But China is showing up as a good buyer of U.S. soybeans. Unknown destination shows up as a good buyer. So China is still well behind their normal pace for this time of year, but they're narrowing the gap between what they were at previously to where they are now. Part of the reason is because of the drought-like conditions in South America. Because it's so dry there, China and some other countries are trying to book or hedge their inventory just in case things don't go as well as presumed down south. They can always cancel these purchases later, but they're getting that inventory purchased around them now. So yesterday when we talked, we said there were no private export sale announcements. Well, it was a technical delay, technical glitch. The USDA actually had an export sale, but they didn't release it till our segment was done. This morning, there's no sales at 8 o'clock. We'll see if there's another technical glitch that prevented it. But, the trading pattern has been pretty easy this week so far. You rally during the day in the soybeans. The overnight trade's lower. People came in and bought that dip in the morning hours and rallied it into the end of the day. Well, we're a couple cents higher now in the overnight, so we're changing that pattern. That'll be interesting to see if people come in and buy this market again and continue to push it higher, or if we start seeing some profits being taken.
And an interesting note on the export sales report, wheat exports, actual moving it out, marketing year high, 638,000 metric tons. And if you want to be optimistic, the next report we get next week will have marketing year highs for corn and soybeans, since it will be the technical first week of the marketing year. Hang on, we're going to come back and talk livestock futures. We'll talk about the cattle market and the hogs with Brian Hoops as Market Day Report continues in a moment. Welcome back to Market Day Report. Let's jump into livestock markets. Again, we don't trade in overnight session. So what we're looking at are the settlement prices for Thursday. Live cattle, October, down 197, 177 and a quarter. December at 176.72, down to 17. For the feeders, it was lower as well. September off $2.50. October down to 87 at 234.57. And the hog trade on Thursday settling lower. October at 80.70, down 87. December at 72.05, losing 65 cents. And we bring back in Brian Hoops with Midwest Market Solutions. And Brian, we do get export sales numbers for cattle and hogs. It looked like lower numbers for cattle at the final week of August, and for hogs, lower as well.
Yeah, they weren't terrible numbers, just basically falling back into the range of where they've been. 16.5 million tons of beef and 20.8 of pork. The pork's down, I guess, from last week fairly significantly, but we're just, right back into that trading range where we've been. Cash cattle trade yesterday, maybe at 181, $1 to $2 weaker. And that comes after news around midday, about 11:30. It kind of hit the news wires that there was an anthrax found in cattle in Wyoming. And of course, that's a danger to humans. And so when that news kind of hit the wires, we saw the futures market really start to sell off in the cattle complex. So we may see some follow through selling on that market today, as we don't have much answers of what, how, or anything about what was happening in Wyoming. We just don't have any answers there. So these export numbers not going to help us out much. The non-farm payrolls that came out this morning, jobs were revised downward in 11 out of the last 15 reports. And so these numbers coming in a little bit lower than expected probably argues for at least a small rate cut, maybe 25 basis points at the end of this month. That will help try and stimulate that economy, try and help consumers have a little bit more money in their pockets.
Yeah, that's a perfect take on this. We also get the unemployment rate numbers from the Bureau of Labor Statistics this morning, 4.2%. August, right in line with trade expectations, but really we're looking at levels we haven't seen in 7 years, and that's not counting the COVID era through there. If you throw that out, we're back kind of where we were 7 years ago.
Right. Yeah, exactly. It's not a great economic numbers whatsoever, and that's why people are arguing that we need to cut interest rates, try and stimulate this economy, especially Democrats as we go into the election in November.
Okay. Coming up next Thursday, we get a World Ag Supply Demand Estimates report, and I know you'll be back Thursday to help us break that down as well. We'll also see you here on Monday. Have a great weekend. Brian Hoops, Midwest Market Solutions. And that World Ag Supply Demand Estimate report does roll out next Thursday. So again, this one will have some information that will move the markets. It's not just a routine WASDE report.
Guessing, yeah.
So
this is we see what's been brought out of the field. All right.
There you go.
Thanks so much.